In today's session, I would like to discuss how you can use SAP Business One to comply with the new IFRS 15 standard. What is IFRS 15? This international financial reporting standard was adopted in May of 2014 and will be applicable starting January 1st of 2018. It provides guidance on accounting for revenue from contracts with customers. Here are the steps as described in the new standard. Identify the contract with the customer. Identify all the individual performance obligations within the contract. Determine the transaction price. Allocate the price to performance obligation. And recognize revenue as the performance obligations are fulfilled, which means revenue is recorded and recognized at the time the service or product is delivered. Here are the recommended steps to take in order to comply with the new standard. Of course, each customer may adjust the process as he sees fit. Use the sales blanket agreement to record the contract with the customer, including validity dates, the termination date, and a description. Identify if the agreement is item or monetary type. Enter specific exchange rate, payment terms, shipping type, project, and payment methods in the agreement. As well, if required, blanket agreement can go through the approval procedure process. Enter items quantity, prices, and delivery frequency as needed, in case the agreement type is items. This step corresponds with items 1 through 4 in the previous slide for recording the contract and all its terms. When the time comes and you deliver the product or service, the AR document is created, linked to the blanket agreement, so all the settings you identify in the agreement are copied over automatically. Finally, when the AR invoice is posted, revenue will be recognized. Let's examine two possible scenarios and how we can automate the process of posting the recurring revenue in SAP Business One. The first scenario is that the customer makes advance payment on order for the entire amount of the agreement. Throughout time, we deliver the items and services and recognize revenues per IFRS 15. The second scenario is where the customer pays based on the frequency and fulfillment of the items or services provided. For scenario 1, once the blanket agreement is set up, copy it to a sales order and identify the payment means. This will create an order, an AR down payment invoice, and an incoming payment. The AR down payment invoice debits the customer and credits advance payment liability account. In addition, create a recurring activity linked either to the sales order or to the blanket agreement with recurrence to match the delivery schedule. The user receives an alert from the system when the time comes. At this point, he needs to open the order directly from the agreement or the activity and copy it to the subsequent AR document. For the second scenario, where you bill the customer at the time of delivering the service or the product, the best way is to assign recurring transaction to the blanket agreement. You can select the frequency, validity date, and whether to update prices based on current prices. The document template itself will include the items or service you're delivering. The user is prompted when the time comes to post the document. As before, when the AR invoice is created, revenues are recognized.